Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, traders and investors. Welcome to this brand new Monday edition of Benzinga's PreMarket Prep, brought to you by Thinkorswim and TD Ameritrade. I'm Spencer Israel, here with Joel Elconin and Dennis Dick. Got a busy show for you guys this morning. The GE-BHI partnership is going through. At least it's supposed to go through officially in about a half hour now. Level 3 and CenturyLink, we got a deal going down there. We're also going to talk about the biotech wreck on Friday and the lumber liquidators, which reported earnings. Our first guest will be at 8:15. She is Michelle Krebs, senior analyst at Auto Trader. And then at 8:35, we'll be joined by Gary Kaltbaum. He's an investment advisor, author, and proprietor of GaryK.com. Joel, first, how was your weekend before we get to the S&Ps?
Weekend was great. Had a little Michigan victory over Michigan State, though I can't say we look like a championship team as of yet. And saw a Luke Bryan concert, so pretty good weekend overall. S&Ps are trading up 3 points, 15-point range overnight. The low 1475, the high 2130. Yayo and I are both looking for Friday's high on the upside at 35.25. On the downside, got to respect that close at 24.75. Crude oil trading lower, broke that support but lingered around $50 for a long time. Now trading in the lower call it the mid 48 handle. Gold and silver got a little boost on Friday, going opposite direction so far today. Gold down to $2.90, while crude is trading up about a cent. Dennis, how you doing on this Monday morning? Happy Halloween.
Yeah, happy Halloween. Gonna go get your candy tonight, Joel?
Dana did the shopping for candy, and she loaded things up early. I won't ask you if you have Halloween in Canada, because I know you'll get mad at me.
We do celebrate Halloween in Canada, and yes, we give out candy in Canada, Joel.
What's Spencer gonna be?
Actually, I don't want to really give it away, but well, whatever. I'll just tell you, he's going as Bam Bam because he likes to bash everything up. So we're giving him a little plastic bat and dressing him up as Bam Bam. So it fits what he's all about, which is at this age just messing stuff up.
And that makes you Fred Flintstone.
Actually, I think Bam Bam
Barney.
wasn't a Barney Rubbles kid.
Yeah, you're right.
It was
you're
Pebbles.
Right. Yes.
Was Fred Flintstone. Going back to her childhood there.
Wrong.
Was that a cartoon when you were a child, Joel?
Hell yeah. I loved it. I loved that
Flintstones.
show. Flintstones.
Meet the Flintstones. Pretty good cartoon. They don't make them like that anymore.
No.
They all have to be like educational. They all have to be, nice. They don't have like the Road Runner and Bugs Bunny and stuff. Where those were the cartoons back in the day. I love the old cartoons.
I'm glad
the new cartoons. They're just too nice.
You consider Roadrunner educational, but anyways.
Yeah, it was educational. That's the problem with the new cartoons. They all have to be educational. They can't have just nonsense there where the Roadrunner, tries to, Wile E. Coyote tries to get in, the Roadrunner keeps beating on the Coyote. Can't beat on anything in the new cartoons. Don't promote violence.
Yep, that's the problem, Tay. There's not enough nonsense on TV. That's definitely the problem.
Nonsense.
That's the problem.
It's so real. You gotta have some nonsense in your world. Make it fun. Valentina saying the Jetsons. Yeah, the Jetsons were great too.
Merger Monday, Dennis. Big mergers.
Well, we do have Merger Monday. Couple mergers here to talk about. Well, Baker Hughes GE is more of a collaboration here where they're going together. This was rumored there, obviously, on Thursday night. Friday, you saw Baker Hughes trading up there. There was rumors that they were going to acquire the whole company. Not exactly the case. They're going to form a company together here, though. So GE, Baker Hughes going to form a company together. Spencer, give us the details.
They're going to combine GE's oil and gas unit is the big one here with Baker Hughes. That's supposed to be announced. There's an 8:30, I believe. Yeah, 8:30 Eastern conference.
The official call for this is 8:30.
Yeah, webcast/conference call will be at 25 minutes from now. But that's happening, and that looks to be official.
And it looks like
62.5% will be owned by GE, and 37.5% will be owned by the new Baker Hughes.
I saw something about a special dividend for Baker Hughes too.
Yep,
did you see that number?
$17.50 per share, a one-time cash dividend to Baker Hughes shareholders.
As of when? As of when? I mean, is it as of
at
today?
at closing.
At
Yep.
closing, huh? Dennis, what do you think about that? $17.50?
Well, it's not going to
Obviously,
be at closing. They're not going to get a special dividend right away. Those usually have time to. Did they say that today? They're going to no.
Yeah, I think so.
No,
yeah.
they announced usually how these things work, and I didn't read that. Get a chance to read through the whole press release there. But usually, when they announce a special dividend, then they got a time, and then they got to go ex dividend, and they got to announce it all there. So I'm not sure if this, what the actual date, if they've even announced it. If they haven't had the call yet, they probably haven't announced the official date yet of when the stock is going to trade ex dividend. But once they do all this stuff, spin off and this new company that they're going to form, obviously shareholders of Baker Hughes are going to get a benefit of that 1750 plus owning part of this company there. So BHI trading up significantly here in the pre-market. It traded up, and this is where you want like to look at after hours and pre-market highs, and sometimes that can affect where the pricing is even in the regular session because some people do look at those numbers. On Thursday night when we trade up substantially on this, how high did we get, Joe? I can remember seeing up in the 65s. Is
Yeah,
that
you're
correct?
exactly right. 65.50.
And then how high have we got this morning on Baker Hughes?
A little
I'm
bit
just
over
wondering
that.
if there's
Yeah, no, not much juice there. The people got it right. Went up to 66.01 this morning, but we are back under that,
similar levels.
yeah, 65.50 level. Currently trading at 63.20.
Okay, so that's 63 and a quarter, so it's a few points off the high. It does look like obviously there's been resistance multiple times when we got up there in the after hours session on Thursday night when we got in the pre-market session here this morning, up near the 65 to 66 area there. So that's going to be the initial resistance point for me on Baker Hughes. Obviously, GE, Baker Hughes. Let's check out the technicals here on GE as well because GE trading up 1.3% on this. It actually got a lift on Friday, and it's interesting. So, here's they're going to combine, to form a new company here together, and both stocks getting a lift off it. Maybe this is the way you got to do the M&A stuff here now, because obviously when you do it the other way, and you'll see this in a second in Century Town Level 3, the acquirer has been getting hit so hard lately for these deals. But GE's actually up on this because maybe they're both forming this new company and they like the setup of this better than, a straight out acquisition.
GE needed something to kickstart it after two ho-hum earnings reports. Just give you the technicals on this one. Pre-market high is just made on the last bracket at 29.67. A little resistance in that area. I see a triple top here, 29.70, 29.75. But you got to be, I mean, if this is really a run here and they really like this deal, we should be getting closer and closer to 30 bucks. The first time up there, you should see some institutional sellers here. I was toying around with those 29 calls. Of course, I only did weeklies on them about a week or two ago and couldn't just quite get it right. Did okay on them, but this is the time to own it now. I'd have to probably wait for a pullback instead of chasing it. Friday's close is way down at 29.22.
And then we have a straight out acquisition here this morning. Level 3 being acquired by CenturyTel CTL. Spencer, the details.
Right. So actually, we had this on Thursday that Level Three and CenturyLink were going to announce a deal no later than Thanksgiving. We had that the last issue on the table was Level Three's desire to opt for a go shot period to confirm that there was no other interested parties. That deal is confirmed this morning. CenturyLink is to acquire Level 3 for $26.50 per share in cash. That's a $34 billion deal. Also want to point out, however, that we actually had this in Benzinger Pro all the way back in July. On July 13th, we had someone very close to Level 3 tell us that they were reviewing strategic alternatives to maximize shareholder value that included an outright sale or a large buyback. That was back, what's July? 3 months ago now? So 3.5 months ago that was.
What's interesting here is on the rumors of, the CenturyTel Level 3 deal, they were buying CenturyTel up. Why, buying the potential acquirer up? That was a huge opportunity there because CTL, maybe they didn't know who was going to acquire who, I'm not sure, but CTL obviously traded up over $4.50 on the rumors that they were going to get together with Level 3. Then it gets officially announced, and kaplooey. They just kill CenturyTel here today. It's down to the tune of 10% here now, trading down back, where it came from at 27.40. So this goes to show you if you're buying the acquirers, man, you're doing it really wrong, because in the last 2 years, or in at least the last year, they have been slamming the acquirers on most of these deals. I know back in the bull run, when you're looking at 2013, 2014, 2015, a lot of times they were buying both of the stocks up, thinking, oh, the synergies and everything. That has not been the case in the last year. They have been hitting the acquirers hard. CTL is the acquirer in this case, and this is just a great example of why you don't want to own the acquiring stocks ahead of the deal. So if you're the guy buying it on rumors that they're going to buy level 3, man, you're doing it wrong.
And another couple interesting things to point out here. First, in the CTL, you did get over $33 on Friday, or excuse me, on Thursday. You went to 33.45, all under 27 here. You haven't hit the pre-market low here, but someone that stood out at 27 even on the last 3 out of the last 4 brackets, so that's a big level to keep an eye on. And then it's been under 27 maybe a half a dozen times here since mid-September, going all the way down to 26.51 is the low. So, I'm not buying it to go long between, if it gets under 27, but some shorts may be looking to reel it in, especially after this thing traded, way into 30, 33.45 on Friday. And then I'm just looking at this LVLT chart, and sometimes companies do acquisitions at different times. They're really trying to sell the top here, Dennis. All-time high was 57.59. That was made a couple months ago. Near the top, even though the market is backed off a little bit. Oh, maybe it's not an all-time high. As I go to the monthly chart here, this thing must have done some reverse splits or something, because I'm seeing an all-time high of 1,983.75. So scratch that from the wreck. Stocks had a nice run and getting taken out at just a slight premium to the former all-time high.
You know what's interesting to look at CenturyLink here too, just looking, at CTL's history of dividends. It's got 7.84% dividend down here now, Joel. And I'm just looking, at the history of the dividends there. And it's been paying a 54-cent dividend now here since 2012. And actually in 2011, the dividend used to be 72 cents. So I actually did cut the dividend back in 2011. But you just wonder, they're going to take all this money, buy level 3 here now. Is that dividend safe? Because a lot of people are in this CTL probably for that dividend.
And didn't CTL, this might have been 2, 3, 4 years ago, they did a deal with somebody else, and maybe Global Crossing or something, and they went up like $7 in one day. Do you remember that? And then by the end, or they went up $7 in the pre-market. And
I remember something about that.
Gosh, when was that?
What was the reason for that, though? Was it rumors? Maybe it was rumors, and then the rumors didn't materialize. I can see it when it was. It was back in 2014. It was that huge spike, and I remember this too, Joel. And man, your memory is good to just come. But once you said it, it rings that bell. It was back on the week of July 14th, July 2014, July 31st, 2014. That week, and the stock went from like $36 to $46, and then it was back at $36. So similar trading action here. Just looking at it, from this rumors, and then they pop it up 4 or 5 points. Now it gives it all back here. It's right back to the level where it came from. You look at this and you think, oh, it's cheap here. It's got a nice dividend there, but I think I need to do more homework. Is the dividend safe? That would be my first question there, because the yield is nice, 7.84%. Second question is, what kind of premium? And they're paying a premium for it. They've been hitting acquirers lately. Can they hit it more? It's already down 9%. I'm not sure. So, this is kind of a wild card here, the CTL. But that dividend at 7.84% is attractive if it's safe.
All right, moving on to some other news. What do we got?
Well, we got Michelle Krebs actually is 8:15, so let's take.
Whoa!
Yeah,
Time flies when you're having fun.
Let's
we'll
take
be right back.
Quick break, and we'll grab Michelle.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elkanan, with Dennis Dick and Spencer Israel. And we have Michelle Krebs on the line. She is a senior analyst at Auto Trader. Michelle, how you doing today?
Great. How are you?
We're doing good. Michelle's going to help us just put this baffling auto sector right in a good perspective here. So let's just start out. What's going on with the U.S. car sales market? Has it peaked?
Well, we believe it has peaked. What we are seeing is, if you've noticed the car sales reports, some of them have been down from last year, and we expect that tomorrow, Tuesday, the sales will be announced again for the month, and we expect another a dip. What we are seeing is some slowing of the retail demand. We're seeing inventories rise a bit, and as a result, we are seeing they are taking longer to sell, and inventories are at a higher level. However, we are plateauing at a very high level. We still think there's a couple more years of 17 million sales in front of us.
What do you think's affecting, U.S. sales here? Obviously, they've been very good, but why do you think they're going to start dipping here? And why do you think they peaked?
One of the things we think is that there is an affordability issue. There are people who have been frozen out of the new car market. That's why we see very old cars on the road. The average age is still at 11.5 years, and that's despite all the record sales, that's actually gone up. Wages have not increased, and yet the price of everything else has increased, including cars. So we think that's a big factor. We think the market should have been selling 20 million vehicles a year instead of 17.5.
Al, what about economic indicators impacting U.S. sales? What do you think about the labor market here, gas prices, interest rates? What are your thoughts here?
Well, there's a lot of positive economic indicators. The labor market, unemployment's very low. Gas prices have been the big surprise. They've been very low, and so what that does is puts money back into the household budget. Of course, interest rates are almost nothing. We do expect those will go up, but still, on a monthly car payment, we're talking about a couple dollars maybe, so not a huge impact. The big negatives are the slow wage growth and the affordability issues, and then we fully expect that car prices should go up in the future because there are a lot. Well, first of all, it's just becoming more expensive to build cars because they have to have a lot more safety equipment. We are facing more stringent fuel economy standards, and the technology that goes into that doesn't come cheap. So those will be challenges going forward.
Michelle, we got to ask you about the election. Is there, with perhaps a change coming in the White House here? Do you see any one president being better? I mean, it's kind of obvious with Trump and his trade stance here. Just any comments on the coming election and potential implications for the auto sector?
Well, that's been a tough one to decipher. I mean, I think if Clinton wins, we see kind of the same policies as Obama going forward. I don't think that there is next year, there's the midterm review of the 2025 stringent fuel economy standards. I would think with Clinton in the White House, that will not change because climate change is an issue for her. With Trump, there is worry about what happens to trade agreements because certainly the auto industry has been NAFTA for one has been the U.S. automakers have been taking advantage of that. So it's hard to say. We'll see.
What other market trends do you see here? Just looking here, like pickups. Obviously with gas prices here, you've got to think. A lot of people maybe are looking, at SUVs. Even at or vehicles that obviously are more gas consuming vehicles. What other market trends do you see here? Going forward.
Well, we definitely saw a big surge in pickup truck sales. They seem to be peaking right now because we're seeing a lot more incentives in that market. Pickup truck sales, though, it's less about gas prices, more about construction and housing starts. There's a definite correlation there. So that's one of the reasons we actually saw pickup truck sales move ahead of housing starts. Housing starts are just starting to catch up. And we expect a continued shift of sales from traditional cars to sport utility vehicles. And a lot of that, it's not necessarily gas prices because those vehicles now are built on car platforms, and so they don't have the fuel economy penalty. It's very much a practicality issue. So I think, we're seeing the older millennials become very active in the new car market. They're starting to form households and have children. Children have to be in child safety seats. So SUVs are very practical for that part of the population. The other thing we are going to see very much going forward is in the past few years, leasing has hit record levels. It's about 30% of car sales in any given month are to leases. And so those leases expire and all those off-lease vehicles come back as used vehicles. So we expect a very big surge of those coming into the market in the next few years, and it'll be interesting to see how that plays against the new car market. Will people decide to go for the bargains of the off-lease vehicles, or will they still go ahead and buy new cars?
With interest rates so low, why are people leasing?
Well, there's a lot of attractive lease deals there. For automakers, it's a way to be able to. Let me back up. The big thing with all buyers right now is the monthly payment. It's not the price of the car. It's what's the monthly payment. That's why we're seeing loan terms extended to like 68 months, 72 months. But leasing, automakers are able to offer very attractive monthly payments, and so that leases work for people. But the other thing we've seen is it used to be just luxury cars, but now everybody's in that game. And, Hyundai, Kia. So we're seeing a wide array of different brands and different types of vehicles being leased.
Michelle, moving on for the rest of 2016, 2017. What's your outlook coming off? Definitely a peak year. 2017.
Yeah, well, we'll see. 2015 was a record year. We are kind of 50-50. Is it going to be? We're not sure it's going to be another record. It could be, depending on how aggressive automakers get in terms of incentives. We think it could be 1% off of last year or 1% higher than last year. So, definitely at a high level, and we expect for the next couple of years to be in the same type of range. Maybe not the record setting of 2015, but very close.
What about just jumping into some details there from last week? We heard from GM, we heard from Ford. What did you think of their reports here in this environment there? And also, just jumping into Tesla there. And obviously, this has been kind of something we've talked about for a while here on pre-market prep is that, Ford and GM here, they continue to make, decent money, nice dividends. And then obviously, you have Tesla here, which does make money, but the market still seems to, at least the stock market, seems to not penalize Tesla. They did report a small profit here, but just jump into the reports for GM and Ford, and then why do you think the market just prefers a company like Tesla over Ford and GM?
It's crazy. I cannot possibly.
That's crazy.
If people ask me this question, I just can't explain it in rational terms. Yes, GM had a record profit. They had an amazing quarter. Ford had a decent quarter. They beat forecast. They're still viewed as old school stocks, industrial. And the market is concerned that the new car sales market is peaking, even though they are ignoring the fact that it's at high plateau levels. It didn't respond particularly well. And then Tesla did finally report a profit. Its first one in 3 years. It's only had two. And some of that, I think there were some accounting things. There were they sold some ZEV credits, and there were some different accounting things. But they reported a profit. That's a big deal, milestone that many people have waited for. I think, as I warned, one profitable quarter does not a profitable company make, and they've got some big challenges ahead in terms of rolling out new products and dealing with some issues on current ones. So, but the that doesn't reflect what the market says about those stocks. So it's baffling.
Baffling Michelle Krebs, Senior Analyst at Auto Trader, joining us here with a breakdown of the automotive sector. Thanks a lot, Michelle, and I think we'll be talking to you again in a few months.
Okay, thank you.
Thanks, Michelle.
S&P futures holding steady, up $1.75. A little leak here in crude. Let me see if I can find a level for you here. Trading down 47 cents. We have taken out your October 3rd low. Folks, if you're long this crude or short, looking at an area, next daily low on the dailies, 47.61. That was your low on September 30th.
I want to talk about Friday's action in the drug stocks because they absolutely got murdered. And I think McKesson was probably the big thing weighing down here. MCK obviously warned here. You saw it fall at 1 point over 40 points. Even, looking more specific to those was Cardinal Health and ABC. Those are more direct peers to McKesson there. But I think this was weighing on the entire drug sector because I saw Pfizer trading down $1. I saw Merck trading down a couple bucks. Gilead was down. Biogen, which had a great quarter, in 2 days has given it all back. And, this just goes to show you the sentiment that is out there towards the drug companies has been negative for so long and continues to remain. Every time these companies bounce, they find more sellers here. And I know Biogen, maybe isn't the best example because it had its bottom way back, looking back in June. But if you look at all the other drug stocks, they've continued to move lower. Here is Pfizer. It is now trading down here at, at almost a 52-week low. I know we were down a little bit earlier in the year, but, an 8-month low here for Pfizer. Merck, which, is a beneficiary of Bristol Myers losses, has kind of pretty much given back the entire gain they had after it had gapped up from the Bristol Myers miss on their drug, which and Merck obviously has the drug that is going against that. Bristol Myers itself gave back a lot on Friday as well. What do you think, Joel? Here, what's it going to take to turn the sentiment around here towards the drug stocks?
I want to tie this in a little bit with the trading action that you had on Friday. Dennis, I'm not sure you're at that desk when the news broke of the extension of the email investigation. I mean, the spoofs just fell out of bed hard. I had stepped out to grab a sandwich, and I came back. I'm like, what happened? And what happened was that news came out, and I'm like, wow, this is weird. And I mean, I couldn't put my finger on it, and I started going through different stocks and stuff, and I'm like, well, if people are really worried, that Trump's going to win, or Hillary's out, maybe they're gonna get a nice scoop and nice rally into biotechs, and that did not happen. I mean,
no.
they had trended lower, so it wasn't enough for me to initiate a trade on the long side or anything along those lines, but it just seemed like, boy, okay, these things should get a boost, and they haven't. I think you just have to ride things out here. I mean, you do have a nice dividend. You get worried about, these stocks of dividends. If interest rates go up, that's one thing that's weighing on them. And then the elections, the other thing weighing on them. So I think if you're in them long term, yeah, and you earn some nice profits, you can hold on to it. But at this point, I mean, the charts are not telling you to race out and buy these things. Pfizer looks like it's trying to bottom at 32, but you could have said that at 33. You could have said that at 34. Yeah. You could have said that at 35. So, right now, just sitting tight, collecting that dividend, and hope your principal doesn't get eaten away too much.
Yeah, and here you can learn, even from one of my mistakes here as well. So Bristol Myers there, I've been looking at this one since the bad news, 75, down to 62, down to 60. Down to 55, and I thought it was forming a base of 55, and I was like, it's starting to look like it's starting to form a base. There is some value here, it starts to get attracted to me. Dividend almost 3%, and I picked some up, just around that 55 area, and then boom, it gaps down again here. So, I've got this in my investment account. It's not for a trade, so I'm still in it. I'm still sticking with it because I think longer term, like I said, I still think 10 years from now, the drug companies, everybody's aging population, demographics. I think you're going to be happy you got some drug companies in your portfolio and picking them up on the cheap. But as a trader, if you're just looking at these for trades or swing trades, it's so hard to fight the momentum. And this is just the type of market we're in. We're in this momentum market. When sentiment is negative towards a stock, it stays that way for a long period of time. If you're coming in here being a contrarian trader, it has not been a good environment for you. It's, just trends are very pesky there. And I know the S&Ps have held up very well, but, you look at individual groups of different stocks and different sectors, and there's a few that have really been hit hard. And nothing's really been hit harder than the drugs. And, maybe it is, that Hillary looks like she's going to get in, and maybe it is, that they might, potentially put in some drug price caps. And we don't know. There's a lot of unknowns, but the market doesn't like unknowns. And I think until we get past this difficulty for investors to get positive towards the drugs.
Yeah, I have to agree with you. I kind of underweighted there so far in my portfolio, but perhaps we'll see what
It's
happens.
overweighted
Yeah.
in mine, I will tell you. The drugs are overweighted. It's going to be underweighted soon if they keep going down because that's the way it works. But that is my invest portfolio, and something we're going to talk about next month. Investing and trading. Some people will tell you it's the same thing. I would say it's not. Investing and trading are two different animals. It's all about time horizon there. And obviously, when I'm doing investing, I'm doing more fundamental analysis. I'm doing more, longer term thinking. When I'm doing trading, I'm mostly with the momentum because it is hard to be a contrarian trader. But as a contrarian investor, and I would call myself a contrarian investor, I'm usually buying cheap, when everybody hates the stock. That's how I picked up some really good companies at cheap prices there. And I do believe, when you're looking, at some of these drug companies there, they're starting to get pretty cheap. Like I've said before, Gilead, is one of my favorite long term, but it is completely out of favor here now. Could it go in the 60s? Sure, it could go anywhere there. But, longer term here, I just look at Gilead now, GILD, and I think if I'm owning this with a 10 to 20 year time horizon, and I'm 40 years old now, so, I'm looking at these stocks with that I've held lots of stocks in my investment portfolio for 10 years. I think I'll be happy that I picked some up here at 74.10. I think I'll be happy at this level. But am I going to be happy in 2 weeks? I'm going to be happy in a month or two? I don't know. And I don't know when the turn is going to happen. But, as a trader, I don't want any part of it. But as an investor, I'm just attracted to some of these drugs at these levels.
And these are some of the things that we'll be talking about at the workshop. Having the trader hat, having the swing trader hat. Then, obviously the most important thing is, the long-term perspective on the market. But getting cues from what goes on in the short term can definitely help shape your long-term perspectives. Let's bring up, before we have our next guest here coming on at 8:35, and he's going to be very entertaining, Gary Kaltbaum. Let's talk about an oldie but a goodie, Lumber Liquidators.
Did they report here? Have we got the numbers here from Lumber Liquidators? Because I know it's due to report here this morning, but I haven't noticed it across State Spencer.
Yeah, they reported at 6:10 this morning. Q3 EPS 68-cent loss versus a 19-cent loss estimate. Revenues of 244 million versus 231.6. So they beat on the revs.
That's a weird number I saw on the earnings. I don't know if they had a one-time charge or whatever, but here's a stock trying to get out of the CMG, malaise, the bad news it has had. Been very slow to recover. Not a lot of trades going on. I see 18 as a pretty important support level. Last two lows, 17.95 and 18.03. And then, wow, this stock did hit $20 a couple times in October. So that's your major level, your milestone, trying to recover back. As I mentioned, pre-market range, not much going on, but Lumber Liquidators looks like it has some decent support at 18.
At least this stock, if you're buying it now here, at least, it stopped going down and it's been moving up here from 10. The only problem is it's kind of moved up quite a bit from those lows now. I think it got down almost $10 there back in March. And now, it did kiss up to almost $20 there. So things doubled almost from there. And, at least, you're not trying to catch the falling knife anymore, but it's just, it's like Chipotle. It's like, Wells Fargo. It's like a lot of these companies have just tarnished their image. And it's so difficult, especially as a retailer. It's so difficult once you tarnish your image to really turn it around. And people look at it and they think formaldehyde. Just like Chipotle, they look at it and they think E. coli. Now, I don't know if they're going to look at Wells Fargo and they're going to think, fraud or not. But you just got to be, it's very difficult for these companies to just all of a sudden turn it around because their image is tarnished. And that's why, Lumber Liquidators, something like this, sure, maybe from a valuation perspective, I think there's, if they get by this thing, there's some value here. But I can't get on board just because I think the image is tarnished.
Yeah. Oh, yeah. Tarnished, just like the wood floors. That's that's varnished. Let's take a quick break. Bring in Gary Kaltbaum, investor, advisor, and author of GaryK.com. We'll be right back. Welcome back, traders and investors. We are tracking down Gary Kay. He'll be joining us live here in just a minute or two. But let's take a look at Walmart here ahead of earnings. Stock did have a nice run. I don't have the earnings date here in front of me. Just throwing it out here with quickly on the monthly, that run at 75. That looks like your major resistance here right of the report. Broke 70, trying to get over 70, Dennis, shorter term. Will it fill the gap between 70 and 72 ahead of the earnings report?
50% retracements, and do your math here, Joel, because you kind of just look at the August there. I would say, we did have one high where it got up to $75 there. We had lots of highs at 74, and then you get all the way down here to 67. So, quick your math there. Where's the 50% retracement?
71. 71.
And that's when it gets you in the middle of the gap. So you're starting to come up to that. 70 is a big whole number here. It's bounced pretty good. I don't know. It's hard to buy the bounce here on this thing.
Yeah, I mean, the gap fill 71 to 50 retracements ahead.
I see a lot of overhead supply. I'll put it that way.
Yeah, I mean, you had this run.
Hey, I'm switching you over to my phone. You there?
Yeah, I just called Gary, guys, by the way.
Gary, hold on.
Gary Kaltbaum's, he is a man of many phones this morning. Gary Kaltbaum, he's an investment advisor.
I'm here.
Gary K., how you doing today?
I'm good, thank you.
All right, so busy morning for you. A couple weeks of just a non-trending market, up and down, probably because of that little event that you have coming up with the election. Like to get your comments on the overall market and then the implications for the upcoming election.
Well, you're absolutely right. The market has done nothing as far as indices, but underneath the surface, without a doubt, there's been lots of deterioration. First off, the Russell 2000 is leading on the way down a little bit here. And then as I go through 200 sectors, whether it's utilities, real estate, the healthcare, the whole complex is basically imploding, and I can go on and on a bunch of areas. While the Dow and S&P, though they are below the 50-day moving average, are above support, which is absolutely amazing to me. I just think it's imperative that you just go slow. I do this little thing when the markets are doing nothing, and I'll just put down every night what I would buy, what I would not buy, and anything I would have bought would rally up a little bit and then fail immediately. So that's basically the market you got right now, and sometimes you have to recognize when a market's not giving, it's not taking. What you do is you become a spectator and you just sit on the sidelines and you wait for the big fat pitch to show up.
And coming up, ahead of the election, looking at some of these sectors, and right now, I mean, if you're looking at the market, you're looking at the biotech, you're looking at the healthcare sector, headed for the hills here. Even on that news that on the email reinvestigation, these things couldn't get a pop. What do you do? I mean, if you're holding like the IBB or your Pfizer, your Merck, your McKesson's, I mean, these stocks are just getting decimated here. Is it a little overdone? Time to step in on the long side? Give us your outlook.
Well,
on
I
this.
don't rationalize why. I'm just a big believer in price.
Okay.
And I think a lot of this healthcare really has nothing to do with the election. There's some news coming out on a lot of these areas which are not good, regardless of the election. And I just, maybe they bet, like if you look at an Amgen right now, which just got absolutely murdered last week, one can say, okay, it's a value, maybe it can bounce. But I got to tell you, that's too random for me. I don't know where it's going to bounce from, when it's going to bounce, and it's something that I don't play. I'm looking for stocks that are acting best, acting strong, and leading market up. I'm not looking for bounces after a stock got trashed. And right now, I will tell you that the financials hold up better than everything. The semiconductors have been strong as an ox, but I'm a little bit worried that they've already had the big move. After that, I got to tell you, I'm just not seeing much as far as big leadership. I think we have another big name this week reporting in Facebook. That's going to matter. But as we have just seen, Amazon just cracked, Amgen just cracked, and we'll see what else comes out in earnings. There's a bunch more coming out this week.
So you said there's things that you like that are showing you some kind of strength. Could you touch on some of those issues for us?
Well, right now the financials have the best relative strength in the market. I gather that has to do with the fact, absolute fact, right now that long-term interest rates are rising, which means their margins could expand. I just don't know if you get big move out of big financials. As I mentioned, also the Semiconductors Act. Well, I'm watching a Cirrus Logic here who reacted well off earnings. One name I forgot to mention. I love the reaction to Netflix, and I'm hoping it settles down, pulls back. I think that goes higher. I'm going to just throw out a few names here. Adobe, which gapped up and now sitting tight for a few weeks. Domino's Pizza, real strong reaction to earnings. I'm watching that too. PayPal, another one. So there are names out there, but I got to tell you, on Friday there were double the new yearly lows than new yearly highs on the NASDAQ and more new yearly lows on the New York. So it's kind of strange out there. And again, I think it's a great time to just hang out, relax, put your feet up, and let this thing flush itself out. One has to remember, because of central banks, we have not seen a 20% drop in the Dow and the S&P that stuck since '09. So that's way overdue, even though the Russell did drop over 30% last year. And I think you take your time and relax. And if anything, all these healthcare stocks are probably shortable on rallies up.
All right. What about some sectors here that like the gold and the silver? Big beats here coming off the highs. Really haven't been able to rally. I know in the past that you kind of looked at these as a little bit of safe havens. Any outlook on gold and silver?
Regardless what the gold bugs tell you, right now they're in bearish phases. I'll give you one bit of good news right now on gold, and that is it's down at the longer-term 200-day moving average and has basically been sitting on it, not moving for the last 3 weeks. If that holds good, but I got news for you, if that doesn't hold, that's a short sale for gold to go even lower. So I think you just got to wait. I call it next big move wins, and I gather it will have to do with the central bank. Everybody's talking about December they're going to raise rates. No, they're not. They're not raising rates. They're loath to do it. And they've been teasing for 22 months and raised the rates once, and worldwide markets dropped 10%. So it looked no further to the reason why they haven't. So I just think you're careful, and I'm not a fan of gold and silver just yet. I've got to see better action. I'd rather pay a little bit up than see this thing break down. And one bad day in the gold and silver right now breaks them down pretty badly.
And the oil market, I mean, talks of the production cuts, buoyed the thing up to over 52. Now lost the $50 level here. I mean, you get a little break, and then you get some news of production cuts. I see Iran and Iraq came out and said on Friday, nah, we're not doing it here. Give us your outlook on the crude oil market.
Well, the oil moved on a rumor about what OPEC would do. And I'm not sure that's going to happen. I don't own any oils right now. Even the best names, especially the election, it feels like the market's lying in the weeds here. And I know people think they know how the market's going to react, but I don't. And time will tell. It's a moving target, especially as you mentioned, this whole new email thing. I don't know if it changes the presidential race, but I think it changes the Senate race. And the Republicans, if they keep the Senate and the House, guess what we get? Divided government, and I think probably that's the best kind of government these days.
We're moving on here. You had talked about the strength in the financials and how that was something that you were looking at and going with the trend in that one. But then you mentioned, you just don't think rates are going up in December. The fact that, some of these financials did rally off good earnings and anticipation of higher interest rates. I mean, do you think this is more of, okay, they're rallying ahead of the anticipation and then going to get pounded again if the Fed stands pat?
I think they're rallying in unison of when I look at the 10-year and the 30-year, the yields have been rallying up, and I think that's what's going on there. Again, whether or not it sticks or not, I don't know. They're a weird group, these financials, and they can go from feast to famine back to feast very quickly. But you have very good action right now in J.P. Morgan. You got money flows into Citigroup, Bank of America, PNC, SunTrust, and as long as that continues, terrific. If it stops, we'll deal with it. But right now, I have no complaints. I don't own any. I wish I did right now. If I was one of those I have to be invested guys, it would be in the financials right now. But the good news is I can be in cash, and I have a lot of cash on hand.
Cash on hand and maybe not looking at the utilities yet, right?
No, bear market in utilities, bear market in REITs, and there's nothing that has changed that. Utilities are on a 3-week anemic bounce after a big drop, and again, I need to see a little bit of strength. I'd rather be a little late than a little early when things are bearish, because typically in bear markets, surprises happen to the downside. By the way, one thing I also did not mention, I keep a separate screen of IPOs, and I have about 50, 60, 70 IPOs that have come public in the last few months. They're all getting creamed. And the strongest names, I don't know if you know this, ACIA, Acacia, and Twilio, TWLO, these things are crashing. And I'm not so sure that's the greatest sign either, when all the IPOs that recently come out are just getting, bludgeoned. So just another little factoid for you that has to be watched.
Gary Kaltbaum, investment advisor and author of GaryK.com. Cautious on the markets here ahead of the election. Thanks a lot, Gary. We'll
Thank you.
Tune you in here in late November, earlier December, and get your take. All right, S&P futures up 4 points, 27.50, up 375. A lot of sevens in there.
What a great point, though, on those IPOs. I just never looked at that Twilio chart in a while there, and man, it has been a horrible month. A month ago, that thing was making new highs at $70. It's been halved. Straight down, $35. So 2-for-1 stock split here in the last month in Twilio. That is a little bit scary.
We got a question from the YouTube chat about Dean Foods.
You can jump in and cover Dean Foods. It's been a while. I haven't looked at DF in a long time. Oh, there was rumors. What was the Friday action? There was something that happened on Friday. Stock went from 16.5 to 19. Was that earnings on Dean Foods? What was the reason for the big move Friday?
Oh boy. It seems like this thing just goes like between 10 and 20, but let's see here over the last traders pass around.
It was a Financial Times article on Wahaha interest.
So people speculating on Dean Foods. We know these rumors, so just talking, about, and grouping it in. And some materialize and some don't. But it has been the play so often to be selling these stocks on the rumors, because a lot of times, even when they takeovers actually get announced, especially even in the Time Warner case, you could say the announcement became official. Well, if you were selling on the rumor up at $93, $94, you were better off. And then you get in a case like Twitter where the rumors don't materialize and you're way better off. Now, in some cases, it's still going to, if it gets taken over, it's going to move higher. But a lot of times we've seen lately that the play has actually been to be selling these stocks when the rumors are out there, not buying them.
Great example here, Baker Hughes, right? You got the, the initial.
Yeah, $65.
I mean, and Dennis, this goes back to, what was the first one? Was it the Humana deal when that thing spiked up to close to 220?
There's another one.
Yep. When was that?
You got up to like 225 on that original, on the takeover. And Monsanto. What about Monsanto? How many times do we see spikes in Monsanto? They're going to get taken over by Barron. We were saying this on the show. Like, even if they do, antitrust here, like even if the deal gets announced, it's not going to be just flying up there. There's going to be a steep discount that the risk arbs are going to put in this thing. So, you have to consider all those things when you're looking at it. Now, obviously, we don't know who's speculating with Dean Foods, if it's going to get acquired or if it isn't going to get acquired. And food stocks, there usually isn't a lot of antitrust issues in a sector like that. But when you look at something like a Monsanto and you look at something, like Humana, those have major antitrust issues. And when those things are popping up on speculations that they're going to get acquired by a peer in the sector, you got to say, even if that deal goes through, there's going to be a deep discount. And sometimes these things, it's the best to be selling them on the rumors. And multiple times Monsanto was up at 112, 114, that they were going to get this big 125 or 135 bid. They did eventually get the bid in the 126 area. And look at the stock. It's at $100 bid still on the table because people are concerned the deal's not going to go through. Time Warner's got the bid way up at the 106 or 108 or whatever it was. And it's way down here at $88. And so you've got to look at all those factors when you're buying stocks on rumors.
Hey, Dennis, didn't you get some sells off in Time Warner? I can't remember when I see it spiked up to 9.
I traded a little bit that night and actually made some pretty good money on it there. But I did not get short the stock, though, no. So it would have been nice. I tried. I wish I would have I was kicking myself because I didn't get up at 4 in the morning. I was saying that to myself back on the Friday night. I was like, man, I should get up here and trade that because it's probably going to spike up. The official announcement, I think it could give it back. And I think it went up to 94 or $95. And by the time, 8, 9 o'clock rolled around 5 hours after, the pre-market had already been trading, the thing was down 6, 7 points. And that's because antitrust.
All right, yeah, getting back to some stocks. Not much going on with analysts because we have the earnings coming out. They'll be shaking that. Are there any issues here we still need to cover?
There is a lot of analyst changes here. I think we should just look at this because the analysts have been quiet. We haven't had a lot of ratings changes here, but they were busy over the weekend. I'll just give you the rundown because I know we're running short, but there are some big companies here with ratings changes here this morning. We got Chevron getting upgraded at Goldman Sachs. We got Baidu getting downgraded at Macquarie. We got Lowe's, which has been it's had quite a bit of analyst action. It is getting downgraded here today at Piper. Nike is getting downgraded at Bank America. We've got DE getting upgraded at Baird. We got Time Warner getting upgraded at FBR Capital. And then this one's interesting. We got Deutsche Bank upgrading Macy's and downgrading Nordstrom. And it's interesting to me because I was looking at the same thing and I was saying, man, Macy's just cannot catch a bid here. When you look at the chart, it's way back down here at 35, but you look at Kohl's and Nordstrom's, and both of those stocks have really, done pretty well. I mean, Nordstrom's been incredible. It was down at $35 when Macy's was down at $35 back in June. And, here we are, and JWN is trading up at 52 now, and Macy's has really gone nowhere. So I look at that and think, yeah, you know what, Deutsche Bank, I kind of agree with you here, that, these two stocks typically track each other longer term. And there has been, the spread just completely blown out here now. And everybody thinking Nordstrom's turning it around. But Macy's and Nordstrom's very similar business models here, obviously very similar companies there. And I look at that as an attractive opportunity. Maybe that is a trade. Maybe that is a trade to, look at shorting JWN and Macy's and buying Macy's.
Wow. Let's see if we can get now the retail earnings come out a little bit later, right near the end of the earnings season. Let's see here. Wow, we got until November 9th here, coming off a 9-cent beat here, and a little over a week. I was watching this one. I was trying to play it for the gap fill here, and boy, it did. Textbook gap fill here from the earnings, came back down, just kind of hanging out. The nice thing about this one is if you're buying it here even for a swing trade or maybe a longer term trade, playing it ahead of earnings, you're buying it at the 35.5 level. I mean, if it cuts out at 34, you can definitely see, the air between 34 and really 31 here. But you had the gap fill. You're definitely finding some buyers here in the mid 34s here, now up at 35.5. I don't mind this one from the long side.
And then let's jump into the Nike one because Nike getting downgraded here at Bank America. We know Nike has had a rough couple of months. They're getting up to 60 where you took me out of my bet. And now we're down here at $52. We're down $1 this morning at 51 on the downgrade there. It's found support here before. Do you think this old support area holds here? Or are you concerned on Nike now?
I mean, trade the range, respect the range here. We haven't been under $51. We did it once yesterday. Hit it at 50.71, trading down in the pre-market, just like some of these other stocks. I mean, I think I'd rather buy it if we could take out what you had 4 or 5 highs at 52.30, 52.40. That's your major resistance. You did hit 52.5 on Friday, but closed off that level. So kind of a little bit of the Gary K there. Maybe, show me something on the upside as opposed to trying to pick a bottom. Nike hasn't been under $50 here. You have to go all the way back to August of last year at 47.25. So Major resistance up at the 52.50 area. Psychological support at $50. We're a buck away from that.
We got Bobby Bitt asking us about Under Armour. Obviously, the debacle there at $38 had the earnings and they slammed it down here. I mean, you're at a big hole number $30, but you're kind of just sitting at it. You haven't bounced hard, and that's always, a sign. I think you take out 30, I think you're in a world of hurt here. Again, it's a big psychological level that the stock needs to hold below 30, and then you start thinking, oh, maybe you're going to start seeing 27, maybe you're going to start seeing 25. So the stock absolutely needs to hold 30. If 30 caves, I think more sellers come in.
Yeah, not quite a red dog reversal on Friday. I actually didn't even get to the low of the move. Low of the move's at 30.63 here. You did make a higher low. That's a good sign. Maybe wait for it to get above 32. This was Friday was the first day since the earnings. It had a trend where it made a lower low every day, but it didn't make a lower low on Friday. So there's a little bit of good news there. In Under Armour, if you're looking at it from a trade from the long side. All right, 8:58. Spencer, we want to wrap up today's show and preview tomorrow's show.
Sure, we've got Nick Shaheen on tomorrow's show. He's our options guru, author of Create Income with Option Spreads. If you missed any part of our show today, don't forget about our podcast. We're on iTunes, SoundCloud, Stitcher, and YouTube. If you go to the Benzinga TV YouTube profile, you can find the whole thing there right now, and then the SoundCloud podcast will be up in about an hour. Don't forget to check out Benzinga Pro. You can get a free 2-week trial by going to pro.benzinga.com or by calling us at 313-960-2000. If you call us up and mention that you listen to the pre-market prep, there is a discount on an annual subscription. So get that free 2-week trial today. Again, pro.benzinga.com. Please always remember that all the information, material, and content from our show is for informational purposes only and not meant to be investing advice. We're 2 weeks away now from Joe and Dennis's 2-day trader workshop. I'm going to put the link into the chat right now, or you can just Google Benzinga 2-day trader workshop. Nick Shaheen will be there, and Marie Band will be there. Of course, Joel and Dennis will be there. It wouldn't make much sense to have a workshop by them with them not being there. So check that out. It's in Detroit, second week in November in the Benzinga HQ. That's it for our show for today. Hope you enjoyed it. Hope you enjoyed our interviews with Gary and Michelle Krebs. Hope you learned a thing or two. And we will see you guys tomorrow morning. Have a good rest of your day, everyone.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.